What's up? This is your host, Non-Fungible TC, Non-Fungible Today, and Non-Fungible Tomorrow. And check this out, right? What I got this today in the mail. So I finally got my Ledger Nano, which is a hardware wallet. So I finally got a hardware wallet. I definitely might do an unboxing in the future, but in the short term, I won't use this hardware wallet because I don't really have a purpose. But at the same time, I actually got this cryptosteel. So this is actually another type of hardware backup wallet. So for those of you who do not know, Ledger Nano is actually this thing that you can actually store your crypto, right? So it generates a passphrase and that you can store different cryptocurrency, and you have to verify in order to spend your crypto or move your NFTs, whatever, right? But at the same time, you also have to back up your seed phrase, right? And another way to do that is that, and if you're serious about it, is to buy a backup wallet, right? So this is the backup wallet that I bought, which is here. There's a lot of different type of numbers in there. So what you can do is that you can build a chain, and then that would be your seed phrase, right? And the really cool thing it says is that it actually it prevents fire, right? So you throw this in the fire, it would not melt. So this is actually pretty cool. So I just want to let you know that sometimes it's important to start preparing, right? Because for myself, I've been covering news, and I've been sharing that there's a chance that Hong Kong in March 1st, people may no longer be able to trade crypto on exchanges, right? For retail consumers, right? So once that happens, you want to move your crypto out, right? And once you move your crypto out, it really depends on how much you have, right? If you're just having some pocket money, spare change just for fun, then you don't need to invest in something like this. But if you do have a significant amount of money and you want to just be safe, at least do your best, do your due diligence. Maybe getting a wallet could be a good idea, right? To move funds out and then hold for the long term. Because as I said in my tweet and in my Instagram, looking at the whole environment today, I am, to be very honest, short-term bearish but long-term bullish, right? And if you have conviction in the space, why not invest a little bit to secure your financial future? So that's it for the wallets. Today I would talk about a report by Newzoo. I'll talk to you about it shortly. So what I'll do today is that I'll quickly talk about the report. I'll go through the report. So the report is actually about the future, and also is about the metaverse and blockchain gaming and NFT. And then I'll go through the market. Definitely, if you're wondering why the market looks bad, definitely the market isn't looking positive if you look at all of the equities market news and stuff like that, right? So without further ado, let us begin as looking at this report. So this report is actually called the Metaverse, Blockchain Gaming, and NFTs, Navigating the Internet's Uncharted Waters, right? So this is a report by Newzoo. For those of you who do not know, Newzoo is actually a I think it's an analytics company or research company that publishes research paper on game-related news, okay? So they decide to cover this news. And the reason why I want to cover this news is that you might have seen this in the infographic sometime last year about the metaverse, right? So the table of content, basically, this is about, the introduction, the Metaverse Foundation. So Metaverse Foundation, it seems like the screen is not showing the whole thing. Let me see if I can find a way to show the screen better. Right. Okay, now this is better. So it has an introduction, Metaverse Foundation, executive summary, top 10 trends, Metaverse entertainment, implications for brand, play to earn, blockchain gaming, digital land, NFTs, crypto, interoperability, limitations, and closing thoughts, right? So the reason why I really like this report is because they have this thing, right? The Metaverse Foundation thing. And for those of you who might have seen this table before, this is actually the Metaverse ecosystem diagram. So I love this table because it basically sums up what the Metaverse is, right? So you have different gateways for the Metaverse. You have centralized, you have decentralized. So this report is actually very neutral because it is a company that do research on games, right? It is not done by a blockchain or Web3 company. So the suggestions are kind of neutral. So I do want to share with you and give you a very neutral perspective. And it talks about NFT profile picture collection, social and meeting hubs, economy, like general, Web2 economy, crypto-based economy, marketplaces in Web2 and Web3, avatar, interoperability, music, entertainment, digital fashion and industry. And then part 2 is user interface. So we did talk about the Metaverse Standard Forum within this week. So this is basically about, the infrastructures, the standards and stuff like that. Visualization, how is the metaverse visualized? You have 3D software like Blender. You have game engines to visualize it, to create an experience. NVIDIA's Omniverse, Adobe, and Digital Twin. And then development infrastructure tools. Okay, so these are kind of like blockchains or something like that, protocols. You also have Unity. And then you have cloud storage. Cloud is very important. Connectivity, you need internet access to, access the metaverse. ad tech, advertising in the metaverse, or or marketing in the metaverse. Artificial intelligence over here. So this is basically AI and how it could be used in the metaverse. Decentralized infrastructure, layer 1, layer 2. So this article, this report is actually quite comprehensive. It is very informative in terms of understanding Web 2 and also Web 3, because it always, this company has been doing research on gaming, right? So this one is about blockchain gaming ecosystem. So they did a intensive research. So if you're interested in blockchain gaming, play to earn games, or maybe virtual world, you can check out this report. They have Decentraland, they have Neo District, and all the type of different games, like Star Atlas, that games that might coming soon. And then they have Crypto Gaming Guild. They also did a feature on that. And also marketplaces, development infrastructure tools, crypto wallet, blockchain infrastructure, and things like that, right? So a slight spelling mistake. I think it should be layer, not layer. Let's see. Yeah. Anyways, that's not the point. Our point, yeah, it should be layer, not layer. Okay. Anyways, if you're watching, if you're from this company, definitely check it out. I'm not affiliated with them. It's just that I love this infographic that they have done in the past, and so definitely I want to check this out. So to go through this, the first question people ask is, what is the metaverse, right? So there's a lot of definitions. I've been talking about it as well, but now they do have like a summary. Okay, so through often used interchangeably, the metaverse and virtual worlds are different concepts. While the metaverse will be comprised of many individual interconnected worlds, no one virtual world can be the metaverse, right? So with some thought leaders, they got some definition for the metaverse: a persistent, infinitely scaling virtual space with its own economy and identity system. Roblox, persistent shared 3D virtual space in a virtual universe. Tim Sweeney from Epic Games, real-time 3D social medium where people can create and engage in shared experience and participants in an equal economy and societal impact, right? So there are some terms about the metaverse, some of the terms that it might have, but I just want to really quickly go through about this report. So at first they talk about the NFTs and the metaverse. They did a recap about different type of NFT collections. And then they talked about how, what big brands are actually involved in the metaverse now and what experience they have done. They talked about the potential of virtual worlds using Roblox as an example, but also some of the cons of Roblox, which I want to talk about as well, which is like the high, royalties fees by the platform. They talk about future music entertainment, future of fashion, luxury brands, play to earn, blockchain gaming, guild, future of work, the rush for digital real estate, right? So a bunch of stuff, and a transition from NFT collection to global IP. So they used the Bored Yacht Club on how it was an NFT collection and now it's becoming an IP, right? And at the same time, they did talk about Loot, which is a decentralized IP creation, and also crypto and the promise of interoperability and some things that are not happening yet, right? So really quickly talk about 10 trends shaping the metaverse. So this is mainly what the report is about. So they're saying that a lot of big brands are being involved right now, like HSBC Bank, Nike, they brought RTFK, and then La Liga and Dapper Labs creating stuff like that. Fortnite partnering with NFL for skins, Crypto with discount code in Roblox, okay? And then they kind of shared that the potentials of virtual worlds and what is happening. So Roblox itself is kind of like a virtual world where people can build experience, and a lot of children are playing it, right? So they use it as an example. But I did highlight this, right? So they did mention that Roblox take a much higher fee, close to 75% from game developers on its platform. This is substantial when compared to Meta's announcing 47.5 take rate for Horizon Worlds, a move that generated ample community backlash, okay? And then they also said, but the reason why they could command such a high fee is that they have a large user base. So Roblox right now have around 53.1 million daily active users, right? And they already existing game engine, so they build a game engine, right? So at the same time, they talk about how individuals can make money. They can actually create and sell in-game items, skin, and accessories, right? But then if you sell it using the marketplace, Roblox cut increases to 70%. So it means that they're taking a lot of money from the creators, right? But at the same time, one of the concerns that they were saying is that actually, even though Roblox was taking such a high fee, Roblox is not a profitable company, having registered a net loss of over 162 million in Q1 2022 alone, right? And at the same time, they are facing recent declines in user growth, right? And at the same time, more and more competitors are, blockchain based are emerging, like Krita. So Krita is the one that I think Facebook acquired, but I'm not sure if it's really blockchain based. Cipito, Kogama, okay, that is, being more and more competitive, right? So one of the feedback that I have with this is that unlike a Web3 metaverse or unlike NFT metaverse, right? Web3 metaverse, they have royalties, right? So basically you sell stuff, you resell stuff, you get royalties. And but compared to Web3 metaverses, right? Roblox themselves, because they're running a lot of server already, if you think about the daily active user, and also they built the game already, they do have a lot of operation costs that they have to pay, right? Because it is a established game, a lot of stuff happening. So I think that could be a reason why. And I'm not sure if the marketplace could generate secondary sales. If they could not generate secondary sales, it kind of makes sense why they need to make a lot of money, at first, right? So that kind of really makes sense about why they need to charge such a high fee. But it's really interesting to see from this report is that they are not making money, even though they're charging such a high fee. So could it be because the fee is too high, people are not making stuff, or people are not buying stuff that makes it unprofitable? Or is it because of the people that's being targeted, like kids, like because Roblox is kind of like a game where a lot of kids play, right? Is it because they do not have that consumption power? So all of these would be interesting to discuss, right? So they kind of use Roblox as an example, but I do just want to highlight this just to let you know. So they talked about the future of music and entertainment. They talked about how Fortnite had a Rift tour which amassed 1.3 million concurrent viewers. So they had 1.3 million people at the same time watching a virtual concert, with more than 75% watching on Twitch, right? So 35%, okay. So it is also a significant amount of people, right? And at the same time, they talked about motion capture and also how Justin Bieber was able to, react and then, synchronize real time with the audience in the virtual world on a platform called Wave, okay? They talk about the future of music and entertainment, how NFT is able to give more money back to the creators themselves compared to streaming record label. But really interestingly, they have a spotlight, like an interview, right, with an expert opinion with the CEO of Improbable. So for those of you who do not know, Improbable is gonna be the tech company that's gonna support the infrastructure of the Yuga Labs other side metaverse, right? So they are saying that they are able to, support a lot of people in the same place, like 15,000 players will be able to interact simultaneously in a single place with a natural voice chat, right? So this is basically the people who are working on Yuga Labs upcoming Metaverse project. So this is a really interesting interview, and I definitely suggest you to download the report. The report is in the description link below. You can definitely check it out. So moving on, they did talk about the future of fashion and luxury brands. They used the Metaverse Fashion Week in Decentraland as an example. They did talk about how Facebook is launching their own avatar, fashion. And then they talked about how people are more and more willing to spend money in a virtual fashion, okay, and also to dress up their 3D avatar, okay. And then they interviewed like a fashion house, the luxury fashion house of the metaverse, right? So interesting insight to show digital wearables and also its potential. Then they talked about play to earn and blockchain gaming, and they were quite honest to say that the early iteration of blockchain games lacked the fun elements, right? They are saying that 49% of unique wallet interacting with decentralized applications were active in blockchain games as of December 2021. But however, this does not mean the unique active wallets does not basically mean players, right? Because some of them have multiple wallets, and that's what they're saying. But it's interesting to see this data, and that is Sandbox Season 2 Alpha attracted last for a month. Okay, so they last for a month, attracted over 300,000 unique active users to the virtual world. Okay, so basically this is actually an interesting number to see. So they were talking about the play to earn business model, the pros and cons, and our current verdict. So basically, too early to see and stuff like that. They talked about play to earn blockchain gaming, some of the examples, and then they did a spotlight, okay, with like a block layer one, head of the business development to talk about how the layer one supports play to earn gaming, and then they talk about the future of work, right? So what they say is that now we have play to earn guild and organization and scholarship programs, right? So players who use these assets in this scholarship program could usually retain around 50 to 70% of the resulting revenue, with the rest going to the managers and the guild itself, right? So they are saying that play-to-earn guilds are becoming more popular in growth markets. So the focus is really on developing markets, right? Not really mature markets, because maybe the play-to-earn money itself isn't enough for a mature market daily salary. Okay, so that's a concern. So they're saying that play-to-earn is becoming more popular in the Philippines, Vietnam, and Brazil. Okay, so they are saying that primarily because blockchain games offered higher ABS, often temporary earning opportunities, right? So temporary opportunities, right? So it isn't really a permanent job. It isn't really like playing an esport game, being an esport player, right? But at the same time, they did also mention one of the biggest concern is that because a lot of these guild invest in these play to earn blockchain games, they own a lot of these NFTs and tokens and stuff like that. However, it is uncertain whether guilds owning a huge part of a title's NFT before the game's release is advantageous for the players themselves, for they are now fully dependent on the service of a profit-seeking third party to play the game. So it really makes sense. It really comes from a traditional gaming background, right? The report writers, right? So if you have a lot of people who are here just to make a lot of money, right? It's not going to be positive. Like it might not be positive for the game, right? In terms of the enjoyment, because of the focus or the votes or DAO, whatever, would be focused on making money rather than making the game enjoyable. So the question is this sustainable? Okay. So moving on, they talked about future of work, hyper realistic, examples on Unreal Engine 5, Voxel Edit, which is basically the Voxel engine for a sandbox, which you can make NFT asset. But it's interesting. I'm not sure if they changed it yet, but after making the asset, you can't really upload it unless, or you can't really use it unless you are a certified or verified, voxel artist from Sandbox, right? So they spoke with the co-founder of YGG, one of the biggest, guilds. Okay, so they also talked about the rush for digital essay. Okay, rush for real digital essay. Okay, so they're saying that people are speculating on digital real estate because they hope that these virtual worlds will gain in popularity, right? But in order for this to happen, such platforms need to provide compelling reason for a critical mass of non-crypto native users to join the ecosystem, which will in turn increase the network effects and make these virtual worlds attractive, right? This isn't a unreasonable expectation, and some of the most popular games are Roblox, which is 43.5 million DAU, Minecraft 141 million MAU, monthly active user. So they're saying that okay, there is a huge benchmark or huge thing that these platforms have to do, right? We're talking about millions here, right? But Sandbox Alpha Season 2, which was open to public, only attract 300,000. And these 300,000 people might be duplicated wallets or users as well because they want to complete it and they want to get more raffle tickets to get Sand tokens, right? So definitely there is a huge barrier or a huge benchmark that these decentralized Web3 metaverse have to reach in order to have such valuations, right? So moving on, they talk about what's the point of having virtual land. So they talk about, as traditional advertising channels and social platform has grown less popular with the current young generations, creating high fidelity interactive experience in virtual world will be a key avenue of user acquisition for brands in the future, right? But however, a lot of these metaverse right now aren't really that high fidelity, isn't really that engaging. So it really it's interesting to see how we'll have new metaverses or maybe existing metaverses, how they're gonna build to create more interesting experiences for younger consumers, right? So they also talked about Boson's protocol's large land purchase inside Decentraland, where they built a virtual shopping mall, hints at the future of immersive e-commerce experiences, right? So it's interesting to see these observations. So what does the future hold for metaverse real estate, right? So although individual interest in virtual land has substantially waned in recent months, a growing number of popular brands like Adidas, Samsung, and Gucci are still eager to double down their digital presence, given the low risk, high reward nature of acquiring it for brands of their size. So they kind of saying that these metaverse land in the future or currently right now is being targeted by big companies rather than individual users. Okay, so that would be interesting to see. So if you are an individual user, it really depends on what's your goal, right? If you want to use these metaverse land to create event to generate value, then it kind of makes sense for you to be active there, right? But if you're thinking of buying one small piece of land and just to flip it, is it possible that you'll be able to find these brands? Because usually these brands, when they buy land, they buy 2 times 2. They don't buy 1 times 1, right? So what you'll be doing is that you'll be limiting yourself to trading with other retails. But the problem right now is with the market being so down, not a lot of retailers are actually trading 1x1, right? Unless people like myself who want to host virtual events, right? So that would be a consideration for you. So if you're a landowner, maybe splitting these land to 2x2, and then maybe approaching these brands, giving them a proposal, helping them build an experience could be beneficial for you to build real estate in the metaverse, right? So they talked about some examples of what brands did. So Adidas went to the sandbox, Gucci has present in the sandbox, Samsung went to Decentraland, JP Morgan in Decentraland, HSBC in sandbox, PwC in sandbox and Decentraland, Prager Matters in Decentraland, Softspin in Decentraland, Standard Charter in the sandbox, Snoop Dogg in the sandbox, Warner Music in the sandbox. So only a few names that they use, they share, right? Sandbox and Decentraland, right? So if you're looking into the metaverse or whatever that brands might be interested, so you'll definitely check Sandbox or maybe and Decentraland, right? But my biggest concern with Sandbox right now is that it's not out yet, and there is no promise of longevity. Decentraland, it runs on a DAO. It runs on, the DAO makes money and then it runs the server, right? But and then it has 11 different type of servers, so to ensure the longevity. But for Sandbox right now, the game is not out yet. We do not have the full experience. They have made no promise that Sandbox will be here in the next 10 or 20 years, okay? The Sandbox game is going to be here as long as the company is still here, right? As long as the for-profit company is still here. So I do think that there's still a lot of uncertainty, and that is my approach to the decentralized metaverses right now. Because if you really think about it, Decentraland does use some sort of DAO infrastructure, also DAO treasury in order to fund it, right? So that is really fully using Web3 and using decentralization. But Sandbox is actually kind of like a Minecraft game that is only backed by digital asset, which is NFTs on the blockchain. And that's it. There's nothing else that makes it stand out from, Minecraft. Say Microsoft one day decides to use blockchain technology for all of the Minecraft items, right? Then basically Sandbox has no competitive edge. But the only competitive edge that Sandbox could do is to maybe set up a DAO, run things using a DAO, have a treasury that could run Sandbox for X amount of years, and to ensure the landowners that, hey, actually you're owning land for 5 to 10 years, okay? So this is the estimation, right? Rather than just running a Minecraft server that could crash, or maybe nobody runs the server anymore, right? So I do think that, Web3 isn't just a catchphrase, right? These companies really have to sit down and think, okay, how are we going to be more decentralized? How are we going to make sure this Sandbox platform is going to run for a long time so that it is value for money for people to buy land? I think that is definitely a big concern that they have to think about, okay? Or else these land do not justify these prices, right? Because right now these prices are for in perpetuity, right? You're not buying the land for 1 month, 2 months, 3 months, right? You're buying it forever, right? So it kind of makes sense if you break it down. But we need a reassurance that, okay, these developers, these companies have longevity in mind, right? They aren't just here just to make a bunch of money, then run a server like a game. You get the idea, right? But anyways, brands are coming into these metaverses. So in the almost at the last session of the report, they talked about what makes a profile picture collection successful, okay? Which is actually quite honest, I would say. But this is actually the profile picture collection, right? They also talk about non-profile picture NFTs, okay? So what they say is, okay, track record of founders, but in a space that is always not dogs, full of anonymous founders, this could be difficult. So definitely check this out. I mean, like if in the future there is more and more founders that decide to dox themselves, maybe that could be the next successful project, right? And also you have to see the track record, the art style of the NFT, endorsement from popular influencers, the mint price, notable partnership, innovative and original feature, community engagement over and above the financial incentive that the project provides. So innovative and original feature. So basically, Moonrunner has been running up and down, and the reason for that is because it was innovative. Based on the moon cycle, the NFT would change picture, right? So that could be a reason why it went up, right? So according to this, basically the appeal for profile pictures originated primarily from 3 sources, which is quite genuine. I mean, quite honest. Number 1, social status. So they're saying that a lot of celebrities and high net worth individuals are seeking to keep up with the latest pop culture trends, okay? So that's why they buy a profile picture NFT, right? But if you do notice recently, a lot of these celebrities are no longer using profile pictures for their own profile picture, right? I'm not sure if you noticed, but a lot of them have removed quietly removed this profile picture because the market is down, there is no hype over there, and then they use their own picture, right? So another thing is for advertising and brand building. So basically the Creative Commons status of many popular projects, most notably Bored Ape Yacht Club or CryptoPunks, provide owners with the IP rights overlying the profile picture asset, right? So Bored Ape Yacht Club is a big project, people know about it, and you can actually own that profile picture, use that to create merchandise. So this is another reason, advertising and brand building. And the third one is financial incentive and speculation. So basically, it's just speculating the price, the opportunity that I could give you like a double, 10x, or whatever. Okay. But at the same time, this report says that not all NFTs are profile pictures, right? So they talked about, profile picture NFTs are usually in the spotlight due to the high selling prices. But at the same time, there are a lot of NFTs that are utility driven, that are successful, and then they give you a different type of examples over here. Okay. So they do talk about how Bored Ape Yacht Club, the road to success for Bored Ape Yacht Club. So they started out as a profile picture collection, and then as time went on, the Bored Ape ecosystem in the mature celebrities like Eminem, Justin Bieber, and Gary Vee, among others, joined the club, right? And then also they provided like an Ape Fest, which is a visible and pop, it's kind of like a PR thing, right? It is, anyone can see, oh, this is a festival, you could join by owning this NFT. So turning this hope, like we have a hope that, oh, this collection is for doing this, and then turning this hope and then actualizing it into certainty, and then using that IP that, if successful, build more stuff, right? Like for example, Bored Ape Yacht Club is now focusing on building the game, okay, and also there is a virtual brand that is featuring Bored Ape Yacht Club NFTs, okay. They also talked about decentralized IP creation, like how the founder of Vine. So for those of you who do not know, there was a project that went viral and was selling for a lot of ETH, and it was just basically this, right? It was called loot, right? Just randomly generated items, and then you can use these items to build other projects, right? So actually, this project was created by the founder of Vine. No wonder, right? No wonder why the project went viral. No wonder so much people bought in, because the project founder is actually Vine, right? Vine founder is the short video content platform, right? So it was a free mint, blah blah, and then they talked about how this is an experiment in decentralized IP building. So they use these roots to build different type of characters. It's kind of like Dungeons and Dragons type of stuff, and then generate realms and stuff like that. So this is quite interesting. Another interesting case study you could check out. So they talked about crypto, the promise of interoperability, but right now it's still so early, and whether NFTs is bad for the environment, is interoperable, feasible. So for them, what they say is that while the ability to transfer asset and NFTs across different experiences and game might sound appealing, technical and political roadblocks are currently preventing true interoperability from becoming an industry standard, which makes sense, because like it might not be in the publisher's best interest to foster an environment where players are encouraged to take their items out of the game's economy ecosystem at will, since it's likely to lead to IP diffusion, copyright infringement, and arbitrage opportunity that can prove damaging to some publishers, right? So this is actually a very neutral statement that has a lot of substance. So I do think this report has a lot of substance besides some of the spelling errors. But it really shows you that if Web3 companies truly believe in the idea of interoperability, is it possible that they will sit down, for example, all of these platforms will sit down, like Decentraland, Sandbox, Cryptofloxo, blah, 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 Somnium Space, all sit down to come up with a maybe Web3 standard forum, and then make all of these NFTs, find ways to make it interoperable, movable and stuff like that. If they really do that, then they really genuinely believe in decentralization. But if they don't, or if they have made no attempt to do it at all and close everything within their own ecosystem, then they are probably just using blockchain as a buzzword, using decentralization as a marketing gimmick, right? So we really have to see which the projects are truly using all of the benefits of decentralization, like what I said, truly using the DAO structure, using the treasury to make sure that project will sustain. So that's it. That's basically the this report. All the links is and also what stands between us and virtual utopia, political and regulations and moderation, IP rights, privacy, and the ethics, accessibility, and scale. Right. So scale is so important, right? So that's why I always say Web2 companies is gonna create that accessibility and scale because they have the money to do it. They have the devices to do it, right? So that's it for today's report, okay, the deep dive. So let me go through the crypto and NFT news today. So definitely market is not looking good. 5 things to know before the stock market opens Thursday. So just now, the stock market just opened right now. S&P on track to finish the worst half in 52 years, right? We are definitely in very bad market. Let's look at this. Yeah, Nasdaq is down, right? We do see a sea of red. Crypto in general, boom, down 4.3% decrease. Bitcoin is back at 12,000. Ethereum is back at 1,000. There's a chance that it might go back to 3 digits, right? That we saw like a week or two ago, right? But I do think that people are waiting on the sideline. Okay, if you look at stablecoin, we do see some drop in stablecoin. The market in general is a sea of red. But talking about stablecoin, I saw this, right? So this is a post by CryptoQuant's CEO, which is an on-chain data platform that I've been using to share every day. And basically what he was saying is that everyone is talking about bullish things, but most of them haven't left the crypto market. They're just waiting for the bottom, right? So he's basically saying that the crypto market cap has gone down 70% from top, while stablecoin went down only 11%. So basically what he's trying to say is that people are holding stablecoin and then they're waiting to a price that is low enough, then they'll buy, right? But at the same time, they are saying that stablecoins are sitting in an exchange are worth half of Bitcoin's reserve. We have 25 billion loaded bullets that can make crypto asset go up. The question is when, not how, okay? But at the same time, this sounds bullish, right? But at the same time, people are saying that wrong. These stablecoins have been created out of thin air and used to buy crypto and simply under collateralized now, right? And then people are saying that, there's a lot of risk in stablecoins and stuff like that, which kind of makes sense because we have a lot of FUD related to stablecoins, right? A lot of these stablecoins are over collateralized, right? You stake it, you lend it, you borrow it to someone use leverage and stuff. So some of these numbers could have some difference with the real money that's in the market. So I just want to share this with you to provide you both a bullish point of view, okay? But at the same time, a more practical and also kind of a pessimistic point of view, like how many of these stable coins or how many of this crypto market cap is over collateralized, right? A lot of money borrowing money that makes appear bigger than it is, right? So if we go to crypto quants, if we look at the stablecoin total supply, we can see that there was actually a huge slump, okay? This slump was actually the UST crash, okay? This huge slump was based on the UST crash. But ever since the UST Luna crash, the stablecoins market cap went up a bit, right? So basically people were selling and stuff like that. But recently it dumped a bit, right? So I think this could also be due to the USD withdrawal, people cashing out the USD. So stablecoin is it really that high? Well, definitely it is going on a downward trend, okay? Just to let you know, okay? So this is on crypto quants, okay? Today let us look at the what's this? This is basically the max paying price, right? So this is a futures option expiry. Today the max paying price around 22,000. So if bears are able to keep this price even lower, they'll make money, right? If bulls are able to put it higher, then they make money. So right now we have dropped, so bears are winning in terms of the max paying price. So let us move to NFT. NFT in general, nothing interesting besides a few. Look at this, okay? NFTs Sues had 56 new owner change in the last 24 hours. So I think this is quite interesting, right? And then at the same time, Illuminati had earlier it was around 10% price change. But I think something must be up with this and maybe Goblin Town or people are just bullish on truth the thing. So Ethereum NFT trading volume kind of going down. Look at this, right? Look, the black line is unique buyers, right? Unique buyers definitely have gone down. The value in US dollar has definitely gone down because of the crypto price. But in general, this is a downward trend on Ethereum. In Solana, USD value definitely went down. But the sentiment is kind of weak, really. This isn't really a NFT summer, just to be honest, right? So look at this sentiment in general using NFT Gold. People are losing money in the last 30 days. Blue chip project, the price is going down, market cap, 24 hours, isn't a lot of trading volume. The sentiment is just bad, like cool, okay? So interest news, okay, let us look at Masiri and see if there's any interesting news. Okay, so I did come up with some news I want to talk about. Today is actually a big day for Ethereum. Not really a big day, but there is a Ethereum upgrade that people are not talking enough. So the Glacier update goes live on Ethereum network today, right? So basically what happened is that it pushes the difficulty bomb back another 100 days. So what does this mean for Ethereum 2.0? A lot of people were saying that, oh, the Ethereum merge is going to happen in August, right? Ethereum 2.0 will help Ethereum move from proof of work to proof of stake. Very bullish, market will turn green, right? So basically what happened is that this upgrade has just occurred, okay, occurred at the block 115 million on June 30th, which is today. So basically this upgrade is the network's hard fork, which means that it creates new rules to improve the system and require the node operators like the miners to download the latest version of the Ethereum client, right? So you need to update your client to perform this update, right? But interestingly, not all node operator and miners follow the recommendation though, as the data from Ethernet show that only 65% of clients were fully prepared for this Glacier update, right? So it really kind of shows you the sentiment of miners, right? Whether this is really bullish, right? Because miners themselves do hold a lot of Ethereum, and if they are not bullish about this, if they are not excited, and if they decide to sell, it will create a huge selling pressure for altcoins and everything. So everything is very short-term bearish, right? So moving on, like Erigo, the network's second largest client, is the only one to have all 164 upgrades, okay? A client upgraded. The network's most popular client was only 67% ready, right? Which many as a 448 client running the outdating software, right? So not really bullish in terms of I think the miners, being ready for this upgrade, okay? But this upgrade really has nothing to do with ETH 2.0. Like, it has something to do with ETH 2.0, but not in that direct sense, right? So it basically delays the difficulty bomb. So what is the difficulty bomb, right? The difficulty bomb, which has been part of the Ethereum since day one, is a piece of code responsible for exponentially increasing the difficulty of mining Ethereum, right? So basically, when this happened, it incentivizes miner to continue the operation as the network transitions from its current proof of work algorithm to proof of stake consensus model, right? So the difficulty bomb mean that the actual transition known as the merge could be just around the corner. So what it really shows us that proof of stake is gonna come because they have kind of moved the difficulty bomb back. So it means that there is a set time that they want to do, but it was kind of pushed back, right? So an implementation of the merge has already gone live in the testnet, which I talked about a while back, right? So pushing the difficulty bomb for another 100 days, however, makes it unlikely that the schedule will be met. So kind of they're saying that, okay, there is going to be a delay compared to what we said in terms of August. Ethereum 2.0 is not coming in August. It's now being delayed, right? Okay, so now with the new updated proposal, now pointing to mid-September as a new time frame for the implementation of the mechanism. So mid-September would be that date that we want to look at whether ETH really becomes 2.0, okay? So just want to share with you that actually there was an upgrade on Ethereum, but no one's talking about it. Market's bearish. Another bearish news really, Grayscale, which I talked about yesterday, was actually planning to hopefully to get a spot Bitcoin ETF approved by the SEC. If a spot ETF is approved, it basically means that the people who are selling those ETF would have to buy Bitcoin, right? They have to own Bitcoin. Right now, the ETF that's being traded is futures ETF, which is buying on the future price. It's not buying real Bitcoin, right? So what happened was that SEC decided to deny this Grayscale ETF for spot Bitcoin, spot ETF. And this is very bearish, right? Because you don't have a bullish catalyst, right? You don't have one big player to buy a lot of Bitcoin, right? In order to support this ETF. So that's why the market was shaky, because you have another factor that affected this. So it kind of caused the market to be very shaky with a lot of selling pressure. Okay. So what happened was that Grayscale had enough, and then they decided to say, okay, we'll file a lawsuit against the SEC. Though they decided to file a lawsuit against the SEC, saying that, oh, you are not you're failing to apply consistent treatment to similar investment vehicles, right? You're kind of rejecting us for the sake of rejecting us, right? You're not being equitable, right? You're not being neutral, okay? So but the thing what SEC say is that the SEC believes the crypto environment is still not yet ready, right? Okay. So interesting to see this Grayscale suing this, so it will definitely take time for the court to rule out whether the SEC did something wrong. Another news, but it's not all negative because new spot Bitcoin ETF launches at Euronext Amsterdam Exchange. So basically, if you're not launching a spot ETF in the US, why not do it in Europe, right? So Europe is gonna launch this, so this could be bullish, in the Europe sense. At the same time, NFT News OpenSea actually recently just today just announced that a lot of the emails were being compromised by staff. So one of the staff kind of shared the wallet. Probably, I think the understanding is that they breached the email data to a third party, right? So basically, if you're using OpenSea, if you are linked it with an email, basically your email is being sent to a third party. So someone has that database, right? So if in the next 10 or 20 days, or in the future, if you receive an email that says that, oh, we're from OpenSea, blah blah blah, don't click on the links, okay? There's a chance that it might be a scam, someone trying to steal your data or whatever, okay? Just be more cautious, okay? But it's kind of sad to see, right? Their employee an employee of the email vendor, customer.io, misused the employee access to download and share email addresses with an unauthorized external party, right? So this is sad, okay? I subscribe to the newsletter, so basically my email and my wallet is being doxxed, so it's totally fine. But it's not fine in terms of IT security, and I really do hope that they do more about it, okay? So anyways, another final news, EU officials reach an agreement on AML, anti-money laundering authority for supervising crypto firms. So I was talking about early this month that the EU is thinking to regulate crypto, and now they have come to a consensus, right? So now they are going to force, not going to force, but the requirement could require crypto service provider to collect personal data related to transfer of any size made to from unhosted wallet before. So this was the before regulation now. But now they're not doing it. But in terms of the wording, right, we are now putting an end to the wild west of unregulated crypto, closing major loopholes in the European anti-money laundering rules, okay? So, but this won't apply to P2P transfer where there are no obliged entity involved, right? So basically, this is a tweet that just came out today at 2 a.m. saying that, oh, we came to a consensus, the EU has decided to do some sort of regulation, right? But what sort of regulation, the details, the bill or whatever isn't published yet. So we'll have to wait until they publish it. Once we have more information, once we have the expert looking into it, then we'll know whether this is bullish or bearish. So that's it for today. Thank you for watching. Hope you enjoyed the report that I've gone through. I do think it is a very neutral take. All the links are in the description link below. Thank you for watching. If you like this, remember to like the content and subscribe, share to your friends, share to friends who are interested to know what the metaverse is and what potentials there are in the metaverse.